Critics say XRP isn't decentralized, that too much power and too many coins sit in the hands of one company, Ripple. But what if that criticism misses the bigger picture? Because sometimes having the creator hold the keys doesn't mean control, it actually means incentive. This is the story of why Ripple owning so much XRP might not be the weakness people think it is. Ripple Labs, the company behind the XRP ledger, still owns a significant portion of the total XRP supply. Early estimates place Ripple holdings around half of the total 100 billion XRP, most of it locked in escrows with time releases. For years, this has raised eyebrows. How can a currency be decentralized if one company controls so much of it? And that's a fair question, because decentralization is the heart of the blockchain ideology, and concentration of supply looks like the opposite. But supply ownership and network control aren't always the same thing. And the economics of XRP's design make Ripple's incentives more complicated than they may first appear. Ripple didn't just create XRP, it built an entire ecosystem around it. Payment corridors, partnerships with banks, liquidity tools like on-demand liquidity, and regulatory engagement. These holdings aren't simply a treasure chest, they're the fuel for expansion, to incentivize new partnerships, to fund operations and development, and to provide liquidity in early markets. Think of Ripple less like a whale investor and more like a central bank of its own economy, providing liquidity when the market's too thin to grow on its own. And crucially, most of Ripple's XRP is locked in monthly escrow releases. That means they can't flood the market even if they wanted to. The supply is metered and transparent on chain. And here's where the economic logic kicks in. If Ripple were to suddenly sell large portions of its XRP, two things would happen immediately. The market price would crash, and Ripple's remaining holdings would lose value just as fast. Flooding the market is like burning down your own house to sell the furniture. Ripple's self-interest aligns with holders. Their wealth and their reputation rise only if XRP's value and adoption rise. This doesn't make them altruists, it makes them rational actors in a market where their long-term upside depends on XRP's credibility and stability. And that alignment, strange as it sounds, might be healthier than thousands of anonymous whales acting with no accountability at all. A common misconception is that owning a large share of supply means controlling the ledger, but XRP's consensus protocol doesn't work that way. Ripple holds many coins, but it doesn't unilaterally control validation. Independent nodes decides what transactions are valid. Yes, Ripple has influence, but so does Apple, Google, or Microsoft in their own ecosystems. Influence doesn't automatically mean domination. Sometimes a degree of centralization in the early stages of a network help it survive, especially in a world where pure decentralization can collapse under its own chaos. Ripple's structure gives the market something rare in crypto, a visible, accountable entity with a vested interest in the project's success. When you step back, the question isn't, should Ripple hold so much XRP? The question is, who would you rather hold it? A private foundation that built the ecosystem, or random speculators chasing short-term profits? Ripple's incentives are long-term. Secure partnerships with financial institutions, increase liquidity and regulatory clarity, drive XRP's adoption as a payments rail. These goals require price stability and credibility, not quick cash outs. In a world obsessed with decentralization for its own sake, maybe alignment of incentives is the more practical kind of trust. Of course, concentration risk is real. Ripple's decisions still affect the market's perception and can create volatility. True decentralization will require time and diversification of holders. But pretending that Ripple's holdings make XRP illegitimate ignores a deeper truth. Without Ripple's stewardship, XRP might not have survived regulatory and institutional headwinds this long. Sometimes, control isn't the enemy of progress, it's the price of getting there. Incentives are everything. Whether it's governments printing money or companies managing supply, the motive behind the action matters more than the action itself. Ripple's large XRP holdings may look like centralization, but their self-interest aligns with everyone who believes XRP should grow, succeed, and hold value. Because when you hold that much of the future, your only rational move is to make it worth as much as possible.